Hello and welcome to Finomoney, the fintech show on the fourth and the final Saturday of this financial year. In the previous episode, we had already marched into the month of March. And in this episode, the time has come to march out into the month of April. I'm your host Ajay and let's see what's buzzing today on the show. First, our special package on payment system operators' hesitance to follow RBI norms and their potential implications to customers. Then in the Q&A segment, digital lending would be the subject and the guest is Mr. Ameet Venkeshwar, Business Head, LoanTap. And followed by our trivia segment, Finogyan would be on the usage of UPI by NRIs and how is this different for foreign nationals. Well, before we go to all of that, you know the drill. It's time for the headlines, the big five, the movers and the shakers that has been creating tremors in the world of fintech. First, BharatPe has scored big time by striking a major acquisition. The homegrown digital payments company has acquired 51% stake in Trillion Loans Fintech, a Mumbai-based NBFC. According to a report in Mint, the deal is valued at 300 crore rupees. As per Registrar of Company filings, the startup had posted a revenue of 7 crore rupees and 74 lakh rupees in profits in FY22. Up next, Amazon Pay has forged a partnership with Bharat Bill Pay to bolster its loan repayment segment. Through the partnership, Amazon Pay is looking to improve its safety and user experience. Customers who take loans from banks and NBFCs can use this option to make on-time EMI payments. Not only that, they can also prepay their loans by making contributions to the segment. And the number of merchants on the UPI platform is set to explode. An RBI bulletin released earlier this week said the number of merchants is set to go up with RuPay credit cards going live on UPI. It also mentioned that the surge in credit card payments on e-commerce sites for the past 1 year had kept the momentum upbeat with monthly spends hovering around 1 lakh crore rupees. And PhonePe continues to bag big money in its coffers. Walmart, the payment app's majority investor, has infused an additional $200 million. With all the money, PhonePe plans to enter and scale new businesses like insurance and wealth management. So far, the company has secured $650 million and will continue to raise funds until it secures $1 billion in capital. And the Chinese loan app case has once again taken center stage. ED, the Enforcement Directorate, has filed charge sheets on fintechs and NBFCs controlled by Chinese nationals. This is alleged to the money laundering probe by loan apps cheating numerous customers. Payment gateway Razorpay and 7 other entities have been accused in the charge sheet. The accused entities used Chinese firms to use their names knowingly for the sake of getting commission. About a week ago, the RBI Governor Shaktikanta Das gave a statement at a public event saying, and I quote, that payment system operators or PSOs are not following RBI norms because PSOs, he says, are finding it too costly to implement them. He also added that special attention needs to be given to third-party agreements that PSOs enter with service providers. What's so special about these agreements? Let's find out in our special package.
Of late, applications from prominent digital payment companies to get a payment aggregator license have been returned. About 2 weeks ago, some of the biggest names of the industry were handed hefty penalty for not following video KYC norms. Both these actions were taken by the Reserve Bank of India so that norms are strictly followed. If you're a customer using any form of digital payments, then these steps taken by the RBI would make you believe that everything would be set right. In fact, as you're watching this video, you would be putting your hand across your heart and breathing a sigh of relief saying, all is well. But the reality, however, is that all is not so well. Because what you're about to see might make you nervous. Shaktikanta Das, the governor of RBI, The same entity which had taken these strict actions has come out with a statement at a recent public event. He said that, quote-unquote, payment system operators or PSOs are hesitant to comply with regulations. PSOs on their part, he adds, are saying it's just too costly to make changes at the system level. And what comes as a rather surprise is that these PSOs are authorized and come under the regulatory domain of RBI. Some of the PSOs authorized by the RBI includes the likes of the Clearing Corporation of India Limited, National Payments Corporation of India that governs UPI, Cards Payments Network, ATM networks, prepaid payment instruments, white label ATM operators, and Bharat Bill payment systems. An interesting aspect to note here is that some or most of these PSOs outsource their payments and settlements to third-party vendors. In fact, Das at the event had weighed on this aspect, saying that outsourcing arrangements need special attention and these agreements should meet the minimum standards as prescribed by the RBI. Now let's look at why these minimum standards in these agreements cannot be overlooked under any circumstances by PSOs. According to clause number 8, titled Outsourcing Agreement under Framework for Outsourcing of Payment and Settlement Related Activities by PSOs in the RBI's website, the PSO will be given the flexibility to retain the adequate control over the outsourced activity. It also has the right to intervene with appropriate measures to meet all of its legal obligations. PSOs will have to ensure that controls are in place for maintaining the confidentiality of customer data and make sure that the third-party service provider is held liable in case there is a data breach. This confidentiality shall be maintained even after the agreement between the PSO and the service provider gets terminated. With regards to confidentiality, clause number 9 says, customer data can be accessed by the staff of the service provider only on a need-to-know basis. And that too, it's limited to areas where the information is actually required to perform the outsourced function. Now, the PSO will make third-party service provider liable for any data breach. But if there is any damage or loss to customers because of that, then the PSO would be liable for such damages. They also have to immediately notify the RBI about any data breach or leakage of confidential customer information. These are some of the most important norms that PSOs have to follow. If PSOs are finding it too costly, as they say, to follow these norms, then it's the customer who will have to pay a heavy price.
Alright, it's time to move on to our next segment, which is our special Q&A discussion on digital lending. And to speak on this, we have Mr. Ameet Venkeshwar, Business Head, LoanTap. Welcome to the show, Mr. Venkeshwar. How are you?
Hi, thanks. Doing well.
Right. Let's start with the basic question. We have already seen inflation touching record highs, and the RBI has also hiked the repo rates. But despite all of that, digital lending loan dispersals are on a high. So what's exactly making them attractive?
So, Ajay, inflation is high, but the consumption is also going up. The consumption has not come down. The requirement is still there. On the digital lending piece, it is more about convenience and comfort, which customers nowadays are more preferring rather than going through the traditional way of doing getting a loan done. So the fintech industry has enabled a lot of banks also who have gone the digital way, and you see the comfort that people want to have and access to the finances with the convenience of their home and without pushing into much of paper.
Right. Yeah. So in any particular segment that you see more traction, like personal loan or like a small ticket sized business loan, any particular area where you see more traction?
So it is all about consumption, right? So right now we are heading towards the vacation, so schools and all will be post exams. You will see a sudden spike again in travel that will pick up. So you'll see a lot of loans, holiday loans, personal loans, which will combine in from there. There will be a spurt in education loan as well as students will look out for options to opt for universities abroad and all.
Right. All right.
Plus the
Okay.
industry that is adding up special products for specific needs. So, you nowadays have consumption specific targeted audience for a specific purpose to be fulfilled. Those things.
All right. So moving on to my next question. Just 2 weeks ago, we saw a couple of major US banks that helped startups collapse. So how do you think fintechs can help or facilitate them from collapsing or take a rescue measure post a collapse?
Uh, is it a collapse? The question is that,
Okay.
where, we are seeing what we call as a fintech winter, where the funding has been difficult for the fintechs due to various reasons and all. So this bank was majorly concentrated towards the fintechs and all. So the funds over there became a crunch, which has come up.
Okay.
So I don't see that it was a collapse in terms of a banking standards or norms, but it was more of concentration that happened over there, which obviously the government took major steps, and the end users were not, in trouble because of that. I think that's the confidence booster that is there. And as far as onshore in India it is concerned, the corrective measures were already in place. I don't see, every month or so RBI does audit and put certain banks under monetary policies and cooperative banks or small banks which are not following norms. The health checkups are being done of all the banks and the system checks. So I think these are the very formidable steps taken by RBI which is keeping this in check. The fintech industry, yes, the way tech contributes is in terms of having the real-time data of conciliation, what is in, what is out. So it is about adaptability, which the government itself has been pushing for all the nationalized bank PSUs to adapt to fintech and make it more viable that they are in control of what is happening in the bank rather than wait for a disaster or an audit to happen to come out what is lying in the closet.
All right. My next question to you is, electric vehicle companies have misused subsidies by using imported components and parts. So post which the government had decided to withdraw the FAME 2 scheme. So how do you think this will affect the demand for electric two-wheeler loans going forward?
Government has taken a lot of steps to push in the conversion of normal IC to the electric two-wheelers. This was again one of the initiatives which helped the OEMs to bring down the cost to provide to the end consumers. But there were a lot of people, which always happens when you have a start, a lot of people move in just because to utilize the subsidy, and it was misused. The right measures from the government will only help it to make it better. Pluck out the people which are using it just only for subsidy, non-serious players, or who cannot have that kind of infra and deliver quality products to these guys. I think it's a short-term period before you weed out the people who are not serious and are there only
Right. So my next question
because of
is,
this subsidy, and it will move in the right direction.
all right, all right. So my next question to you is, RBI has just asked banks to review contracts with fintechs as to know who will do the underwriting process and bear the ultimate credit risks. But how do you think this will affect current and future partnerships, and who exactly do you think should bear the ultimate risk? Should it be the fintech or should it be the bank?
So fintech anyways is an enabler. That has been from the beginning. There have been certain fintechs who try their hands uh, with the regulated entities, want to make decision making, carrying the risk. But we have seen that model doesn't work. And RBI has never said that they allowed or they wanted to allow fintechs. They have been giving signals for many times. But finally, when the digital lending policy came in, it made it very evident that there are specific reasons why a regulated entity should do the risk underwriting and enabling KYC process, customer information, everything as privacy, data privacy, all those factors keeping in mind. The future is very clear, which was earlier also, that fintechs will be the enablers, not the doing the risk underwriting or providing credit. They will be the enablers.
All right. All right. Just adding to that, the RBI had also cited the digital lending guidelines, saying that from a customer standpoint, data transparency has improved, but at the same time, there is a lot of the gray area that is related to the loan underwriting process. Would you care to comment on the what exactly is the gray area here?
RBI has asked to make it transparent, right? There has been a lot of controversies on the Chinese apps and some apps charging a high rate of interest, which was not disclosed to the customer. So they've made it mandatory that it has to be clear-cut disclosed in a KFS statement, which mentions the APR, the total outflow customer is putting out, and all those details. So I think it is fair to demand that, and I think almost all of the regulatory entities are following that, and we don't see much or any impact of that. It should be on the positive side.
Right.
The gray area, I think it doesn't remain any gray because it is black and white. That the underwriting will be done by the regulatory entities, not by the fintechs, and the risk will be with the regulatory entities, not by the fintechs. So when you are doing underwriting by a regulatory entity, it has to be done basis certain documentation, right? So those documents, fintech is an enabler to provide that. Like you have a lot of today, I don't need to walk into a bank or access my bank statement, then upload and do that. If I'm taking a loan from an NBFC or other bank where I don't have an account aggregator facility, right, allows us simple access to be given where you can draw. So those kind of enablers are provided by fintechs. Banks are using that and underwriting.
Right. I'm just moving on to my next question now. What's your take on government's proposed plan to remove pre-installed apps from smartphones? Do you think this will affect user experience, ease of access, and also capturing the market for fintechs?
I don't think government has asked to remove any apps which are compliant, right? They have removed those apps who were not compliant, who were not falling in under the digital guidelines. So it should not impact, it should benefit the consumers only who are falling prey to some wrong practices. And it's a kick on the back for people who were not falling in line. So I think it's a good move from the
All right. Just one last question before we let you go. So the summer season is here and IPL is around the corner, and we have seen some big spends on ads on both traditional and digital platforms by companies. So what's your company's marketing strategies and ad campaigns?
We'll go all out using the IPL campaigns.
Right.
The consumption goes up during the IPL, consumer loans, people buying bigger televisions, going out for partying, so personal loans and all. Again, we will specifically target those things and we'll run specific campaigns related to IPL and the spends over there with some special offers.
Right, right. Any big cricketer that's joining your company as an ambassador or something?
Let's wait and watch.
All right. Okay, let's wait and watch then. Right, on that note, we wrap up this discussion. Thank you so much, Mr. Ameet Venkeshwar. Thank you for coming here and sharing your insights. Hope to see you real soon once again here on Finomoney.
Thanks, Ajay. Thanks.
Well, as I said in the beginning, it's the end of the financial year, which means it's time to file your income tax returns. But before you file your ITR, make sure to check your AIS first. If you're wondering what is that, then tune into Taxing Times, premiering today at 4 p.m. on the Money9 English YouTube channel and on the Money9 app. Download now. Well, UPI has become a runaway success, and now it's been extended to NRIs and foreign nationals as well. But how exactly does it work for an NRI and a foreign national? Check it out in our trivia segment, Finogyan.
So we all know that UPI has become a global success, so much so that the Reserve Bank of India had extended the services to non-residential Indians and foreign travelers coming to India. This means if you have a relative living abroad, then they can also use UPI just like you. But does the digital payment system work differently for an NRI and a foreign traveler? To know the answer, let's go into today's Finogyan. First, let's take the case of an NRI. UPI for NRIs are tagged to their fully KYC compliant bank accounts. So if your relative living abroad wants to use UPI, then he or she has to link their international mobile number to their respective bank accounts to avail the service. So every time they use UPI to buy goods or services, the money gets directly debited from their bank accounts. However, there is one thing they cannot do with their UPI. Well, you guessed it right, they cannot send or transfer payments from their UPI IDs to yours. Now, how is this different for a foreign national? A traveler coming from a foreign country will be issued prepaid instrument wallets, better known as PPI wallets. There are two ways to get these wallets. One is through authorized banks and NBFCs who issue rupee-denominated wallets. They can also be bought under co-branding arrangements with those permitted to deal with foreign exchange under FEMA. A fully compliant KYC wallet can hold up to 2 lakh rupees, and right now the service is just open to foreigners from G20 countries. Once the product gains popularity, it will be further extended to other countries.
Well, it's time to wrap up this episode of Finomoney, the FinTech show. You can watch this episode of Finomoney on the Money9 English YouTube channel and on the Money9 app. Stay tuned to Money9 English to watch all the weekend shows like Company Nama, Reality Check and Spendwise. See you again in the next financial year, that is the second Saturday of April. Until then, take care, goodbye and adios.